Hi, welcome to a new market cap, everyone. Welcome, guys. Mariano, Nick, great to have you with us. Let's start off the show the way we usually do, looking at some price action. I'll pull up that beautiful crypto heat map and see what the colors are showing us this week. Mariano, what should we expect?
It's looking like a Star Wars saber sword. It's not, the candlesticks aren't particularly green.
What? What?
Yeah,
No, it's not. It's looking super green.
but now it's back to where we were.
Your connection is dropping off a little bit, I'm afraid. Let's see if Mariano can regain the connection in time. But yeah, if not, it's up to you and me, Nick. I'm joking. Well, I'm going to cover it super high level. Mariano, if you hear me, try to cut off your video. That could usually help pick up. Actually, he left. He'll rejoin in a bit.
There we
So,
go.
particularly green. That's great. Bitcoin pretty stable. Ethereum still pumping over the week. Ethereum is just absolutely ripping it these last weeks. Seeing a lot of inflows as well. So Mariano's joining. That's good. Let's see what else can we discuss. So I'm gonna pull up actually, yeah, the ETH flows. It kind of corroborates what we were looking at just now, right? Not as extreme as the week before, if I remember correctly. A bit more balanced, but still outperforming BTC significantly, which, yeah, that's interesting. Let's see how long ETH can keep that up. Well, the other items, we had fear and greed scheduled in the retail metrics, but we're going to save that for later as Mariano had all of the key insights there. I,
We lost them again here.
I
Yeah.
do rely on my analysts. So, yeah, I'll just start off the show proper and give everyone a warm welcome. So, yeah, welcome everyone to a new Market Cap episode. Market cap is where funds and firms provide their insight on their activities, their sector, and the markets at large to you, our audience of institutional investors and traders, as well as other industry professionals. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. With us, we have also Mariano, but he'll rejoin shortly. He's our analyst specialized in valuation and market reports. And we're joined by Nick Thama, CTO at Turtle. Welcome, Nick. How are you doing?
Good to be here. Yeah, thanks for having me.
For sure, man. It's going to be an interesting conversation. Hey, before we start talking really in depth on Turtle, maybe give us like your personal introduction first, like your background, what did you do before, and how did it all lead to Turtle?
Yeah. So I'm a software engineer by trade. So I've been doing software development for I don't know 10, 15 years total. Started when I was 16, got into it mostly like app development, and then kind of got into robotics at some point. And for the first, call it like 7 years of my professional career, I was in robotics, working at NASA on their humanoid group out of Houston, and then moved to San Diego to work at a company called Brain Corporation for 4 years. And so I was always following crypto on the side, but I wouldn't say it was ever like a professional in a professional capacity, more so just like trading. And once DeFi summer hit in 2020, started to get like a lot more interested in some of the DeFi apps out there and playing around, yield farming, all that good stuff, and decided to make the pivot career-wise into crypto. So followed a friend to Verify Capital in 2021, Worked on the market neutral fund there for a couple of years, just building out market making strategies, liquidation strategies, these kind of things, mostly on chain. Also built out a lot of the back end trading infrastructure across CeFi, DeFi, TradFi. Did that for 2.5 years roughly. Left there last March and did my own thing for about 7 months. Kind of just helping a lot of funds on the side and doing like some contracting work for a few protocols. And just mostly like AI vibe coding, I would say. It's really like fully down the AI rabbit hole last year, doing my own thing. And then, yeah, met up with the Turtle co-founders late last year. Was introduced by the seed investor, Thea, as, hey, I could help on the tech side, and just started pitching in part-time, and eventually, made the transition to CTO. And yeah, been doing that now since early October last year.
Nice. Okay, good progression. It's interesting here to hear from like a long-term software developer like you, how AI and vibe coding, like even someone you with that background is leaning heavily into that.
Yeah.
And I mean, it's a bit of a tangent here, but it's an interesting one, and we have time. So yeah, like this is changing the whole game, isn't it?
Yeah. I would say the last 2 years, maybe three now, it's just drastically changed how you do coding, because you can now you're almost like you're almost like a transition to manager now or something, because you've got all these agents that can do stuff in the background, like smaller tasks. That's like, I don't need to type all this out. Like it's going to just take me time. I can just think about like higher level design and just farm that off to a bunch of agents and have them build it for me. Um, so it's been very interesting. I've leaned into it heavily because I don't want my job to be automated, So I think we're a ways from that, but like it's for the good developers, you'd be 10x better. For developers that can't think about design, it's probably not a great thing. I think we've definitely seen it impact like the early career market for developers. There's it's a lot harder to get hired now, I think, out of school, which is
Yep.
a bit unfortunate. But yeah, people just gotta have to adapt and be more productive. Really, I mean, the AI is just a productivity tool, and especially for developers, it's super helpful.
Yeah, it's funny. I hear similar sounds coming out of banking and junior analysts. It's sort of creating a gap where like for junior analysts in your first years, yeah, you're just doing like the things that are now easily done with research, and yeah, you can do more interesting things on the research front as well, but you need to be like a level up and think of like the second order effects, things like that. Then it's when it gets really interesting. But okay, all of that
Yeah.
aside, um, let's talk a little bit more about Turtle, and maybe like segueing into that. Sure. First, I want to start out at a high level, like what does Turtle actually do, and how does it fit in with the alternatives that came before that? But segueing into it, maybe real quick, um, like what you just described about leveraging AI, right? Is that kind of reflective of how you're doing things at Turtle right now as well, or is that kind of, I don't know,
I
just
I I think we're a ways from like agents managing your portfolio. I know there's like a few protocols kind of working on that, and it's definitely like an interesting area. I think we'll get there at some point, but I think we're still a ways from people trusting like some agent to do your trading for you. There's just so much nuance when you're making a trade, and I wouldn't personally feel comfortable just like giving that away to some bot that might have a bug in it, and next thing you know, you just got racked on slippage or getting chopped up trading or something. So yeah, I think we're probably a ways from that. I think there's some interesting ways to maybe have agents be involved with, like, if there's like a strict whitelist and you can prove that the code is running on some TEE somewhere. Maybe you can have like this personalized vault agent that's like running your book for you, but that's, I would say, less interesting to me at this point in time. Still, AI, as far as Turtle's concerned, is more more so on like the development team, just like using it to speed up our processes internally. I could also see us using it as like a distribution tool for some of our deal flow and getting it out to more hands. It's like you could imagine like an LLM plugging into like a Turtle MCP or something on the back end and fetching all of our deal flow and displaying that for people. But as far as like managing money, I think we're still a ways from that. So yeah,
Yeah,
very
what's
interesting though.
like actually managing money, it's such a high trust, such a high trust is required. Like that barrier is so high. You don't want to hand that off to any agents anytime soon. I agree. Taking one step back, let's unpack a little bit about for the listeners that might not be familiar with Turtle. Um, at a very basic level, like what is it you guys do? And maybe if you can, maybe provide also like a bit of historical context, like how is it a solution
Mhm.
to what came before, right?
Yeah, for sure. Yeah, I think the easiest way to think of Turtle is like a marketplace for liquidity. So on one side of the market, we've got liquidity providers. So it's people holding stable coins, Bitcoin, ETH, really any asset within crypto. And they're most likely long-term holders that want to earn a yield, right? And that could be a liquid fund, it could be just a high net worth individual, could be really anybody. Our user base is pretty wide, um, but it's because it is permissionless at the end of the day. But yeah, basically we have people that want to earn a yield. They want to earn the best risk-adjusted yield on their stack. And so you can think of Turtle as that being one side of the marketplace that Turtle serves. The other side of the marketplace is protocols. So that could be a new chain, it could be a new stablecoin protocol, new money market, basically anybody that needs liquidity, which in crypto is usually like the hardest thing to gather when you're an early stage protocol because people want to be compensated for the risks they're taking by deploying capital into your fresh code that you just wrote, and so it's quite difficult to get liquidity. And so usually the way teams will do this, right, is by giving away tokens that represent some equity in the entity. And it's a really unique thing with crypto, right? Like in the old world, to do this sort of like marketing spend to get people in the door, you'd have to go raise money and spend dollars to get people to sign up to your platform. But crypto kind of enables this like equity participation for early users, and so you don't necessarily have to spend cash on user acquisition. You can kind of give away equity, which is like a really unique way and cost effective way for people to bootstrap things. Um, so yeah, we service that side of the market too, right? So we're just kind of like a middleman or a matchmaker for liquidity to say, hey, these guys need liquidity, these guys have liquidity. Let's make a deal that makes sense for both sides, so that they get the liquidity they want at a cost-effective rate, and the LPs get compensated for the risks they're taking, um, but relative to other opportunities on the market.
That makes sense. And how are you guys going about this? Does it
Mhm.
all go into sort of like a meta pool that like these other partners plug into? Um, or is the liquidity routed from one pool to the other wherever it's like most earning the most rewards? How does that work?
Yeah. So right now it's very hands-on. So we have a few products that we offer. There's campaigns, which are more for bootstrapping new chains that need day one liquidity across all of DeFi. So for example, we have Katana and TAC as like the two campaigns that we've ran, where before the chain went live, they want to accumulate as much liquidity as possible in vaults on Ethereum, so that when the chain does go live, we can bridge that liquidity to all the different dApps, like say like Morpho or Euler, and so that when people use the chain on day one, there's liquidity so that you can borrow, you can trade, and the lenders can earn a yield basically. And the goal is to kind of use those incentives to almost as like a very quick marketing spend to get people in the door. And then of course there has to be stuff for them to do once they get there. And then like a native yield associated with the ecosystem. Otherwise people are, your incentives aren't going to run forever. You can't just give away the whole company um, and then not have anything for people to do. So yeah, it's kind of like a real like targeted thing that we do to get the flywheel going for some of these
Mhm.
chains. And then on the other side, we have deals, which are more like we're working with individual protocols that are running incentives programs, whether it's tokens or points, and giving Turtle members an additional boost on that yield. So if you're earning Euler tokens on, by being a lender for them, you would get an additional boost to your Euler token yield that you're earning there as a Turtle member. That's like risk free. You don't have to necessarily deposit into any additional vault. But going back to your question, we will have products that do like more higher level optimization or like an index across all the deal flow that we offer. So if you just want a very basic like Turtle USD exposure, Turtle Bitcoin exposure, Turtle ETH exposure, we'll have like a vault that does all the routing and indexing for you across the different opportunities that we have, so that you don't have to necessarily manage it. Because some users and funds, they want to be very hands on and like deploying into the exact allocation of deal flow that they feel comfortable with. But other people just want to earn a yield and they don't want to have to think about like what's the new opportunity every day and like going in and managing, making sure you're earning the proper yield. So we'll have products for both sides of the market. But yeah, that's kind of how we work today. And going back to your original question too, is like what problem are we solving that exists before? And I would say from like an LP's perspective, unless you're like a large fund, it's hard to do due diligence at scale across all these liquidity deals. So often what you do is you're just like, oh, I'm comfortable with Aave. And so I'll just earn yield on Aave, which is fine. But there's obviously like better opportunities out there if you can get past the DD hurdle. And so I think for Turtle, being able to aggregate and have like collective bargaining power for deal flow, we can do the due diligence on the deals for groups of people, and then we can negotiate at scale with those protocols because we have a larger pool of money on the back end. Whereas you as an individual may not get access to that higher rate if you're just coming in with like $1,000 or something, if that makes sense. Um, and then what it fixes on the protocol side is you have a lot of I would say prior to Turtle, I saw a lot of deal flow where protocols would come in and they wouldn't really be at market rate for liquidity. They'd be offering some kind of crazy lockup with their token, or the yield just wouldn't compensate people for the risks they're taking on such an early stage protocol. And so Turtle's kind of there to, number one, help structure that deal flow so that it is market rates and attractive for people and it won't just be a total flop. And then we also can get them the distribution that they need because we've got all of our LPs in our network that we have, and we also have tooling for third-party front ends to tap into Turtle deal flow through our SDK products and stuff, where they can list our deal flow on their sites. And that way, if you're a protocol coming to Turtle, you're not just getting listed on the Turtle front end, you're getting listed on X number of front ends across the space and getting more eyeballs on your deal flow.
That makes sense. A lot to unpack there, and
Yeah.
like you touch on different segments of the market that you cater to. It definitely tracks with what was my part of my expectation of what it is that you offer and the solutions. Like historically speaking, right? It's before crypto, like LPing is like super exclusive and hard. Then with DeFi, great. Now it's accessible to everyone. But to your point, at some point, like the complexity comes back in because like all these new protocols and vaults and pools are launching, and like for individual actors it's impossible to keep track, and like you said, run your due diligence on all those things, like new pools launching from new platforms you never heard about, like what's really like the risk there. And
Yeah.
that's kind of like what you fix again, especially I was thinking for like these retail actors. But then you mentioned you also cater to funds, right, who might be looking for other type of solutions. um
Yeah.
yeah, like maybe you can touch a little bit more on that, like how, like what differentiated services do you offer to funds and firms? And also another thing you touched on briefly is well, I'm not sure. I'm kind of asking what I was reading in between the lines, that you also offer advisory, basically letting new projects know how they should structure their incentive programs so that it's even market competitive. That was kind of what I was hearing.
Yeah, yeah, and I wouldn't say like we're an investment advisor or anything, but like we do help like deal flow get structured through our platform. So if you are a protocol and you're coming in and you're like, hey, I just want to do 2% on stables for my new protocol, it's probably not going to get listed with us, right? Because it's not
Right.
attractive risk adjusted return, relative to what the market rate is. So yeah, we help in the sense that we want the protocols that we work with to be successful. And in order to do that, like sometimes we have to adjust the incentives programs a bit to be attractive so that they do get the liquidity. Because no one's happy if somebody comes to us and they get no liquidity. It's just like not it's a waste of our time, it's a waste of their time. LPs aren't earning anything. So yeah, that's like the extent of the advisory side. But yeah, in terms of like additional services that we offer to like a fund or institution, um, I would say we offer tooling for protocols to do direct deal flow to funds or larger ticket whales, where they can come in and see who's give me a list of turtle users that are ETH whales, for example, right? And you could craft like a private custom deal for those profiles within Turtle, and so you can do a little bit more targeted incentives campaigns for the larger ticket whales.
Okay, that's interesting because and this was an assumption of mine, but going back to that historic context again, right? Like with that emerging complexity in DeFi, what we also saw, like, yeah, first DeFi democratized finance in a lot of ways, made it more accessible to retail. But over time, we saw like private deals popping up again, and you could only get access as an insider. My view was that Turtle was kind of like opening up or like leveling that playing field again by letting everyone tap into the same incentive and rewards and stack those rewards. But at the same time, you still apparently see like the value in more privatized deals. Like what's the reason that those privatized deals still need to exist in your view?
Yeah, sometimes protocols want to be a bit more hands-on and like be able to like KYC the people they work with and know like, hey, this I can put a lot of work into this one or two clients and get the liquidity I need versus having a service, a huge user base. So it's really just situational. I mean, we obviously try to list everything publicly if we can. That's the goal because it does open it up to everybody. But yeah, there's definitely situations where that is not really the best option for the protocol, and so we want to still service those guys. But yeah, one way we've done it in the past is like it's a lot of effort to open something up to the public, and it's also um, yeah, it's maybe not the best deal flow sometimes, and we don't know that until we see whether or not people deploy. So sometimes we'll keep stuff private to almost see like pump that fund style like graduation where you can start it as like a private deal, see
Yeah.
if there's a lot of interest, then you kind of know, hey, it's worth doing that additional due diligence and crossing those hurdles and making it available for the public because we feel a little more comfortable with this as like a as both it being an attractive deal and putting our time into it.
Interesting. So they can actually complement each other, and it's not so either or. Like sometimes in crypto, we think very black white, right? Like very
Yeah.
fancy, like oh max decentralization, max transparency, but
Max
actually,
extractive.
right, like different solutions make sense for different situations.
Yeah, we want to be servicing all sectors of the market. And so, yeah, I think like the more flexible our product can be, the better. Because ultimately there's like a flywheel here where the better, deeper LP base that we have, the better deal flow we'll get. and the better deal flow we get, the deeper LP base gets. So we want to make sure we're getting all the deal flow possible in the door. And so if that means like servicing private deal flow, sometimes that's part of that. But we just want people coming to us, therefore we can distribute the best deal flow possible to all of our users. Otherwise, if we're turning people away at the door, they're just going to go to somebody else. So we try to service, all ends of the market.
That makes sense. And that liquidity base and that amount and volume of deal flow, I want to touch on that a little bit more because it touches on a question of ours. Is that for context, like we think we've seen from you guys a pretty meteoric rise, I would say. Like you guys
Mm.
been gaining a lot of traction, it seemed. It kind of came out of nowhere. Um, of course, you maybe like you cannot give away company secrets and the secret sauce, but I think there are some things that yeah they're like publicly known and you can just see it from analysis. But asking you like, what do you think was your guys' edge?
Yeah. So when I joined Turtle, I would say it was mostly like a Telegram chat group, like with our co-founders. So my co-founders, SC and Ben, they're very good at BD, and they have a very deep bench of funds and institutions that they can reach out to, and they that trust them, that they're not gonna offer them bad deal flow. So those guys have like a really really deep roster of liquidity that we can tap into, and then my job makes my job easy on the tech side, because I always say like the tech is the least important part. There's been people that have tried to clone Turtle many times, right? And they usually do it from the tech standpoint. It's like very similar website, similar product, but they have like not much liquidity, right? And so that's not the moat. The moat is the LP base. The moat is the deal flow. And so I think it's a really good complement between the co-founders and I of me doing the tech side. They handle the BD sales, and they can tap into their deep network. And I don't know how they built it up over the years, but they've got a pretty good network. It's been
That's the
surprising
secret
to
sauce
me.
you can't replicate.
Yeah, yeah.
Funny how in such a tech industry, tech heavy industry, still a lot of things come down at the end of the day to like human relationships and the reputation you built up over the years and the connections you up over the years.
Yeah.
That's very interesting. What you mentioned, that moat, I think that's also part of your guys' success, right? And the network effects. It does seem that the more people join Turtle, the more key you got, like the harder it is to get around you guys. Like, and the more rewarding it should be for new members. Do you think that's
Yeah.
probably at play there as well? Part of your, yeah, that fast acceleration?
Yeah, certainly. Yeah. I mean, we want everybody to win, both the users and the protocols that we work with. So, um, yeah, I think that it's been a fast pace of growth for the last 6 months, and obviously we want to keep continuing to have the best deal flow. So in order to do that, we need to have more LPs and better distribution, because it really ultimately, like, you can't fork distribution, you can't fork the LP network. It's not like a lending protocol or like a DEX or something where like you get 10 clones of it. Like Uniswap's edge isn't their code, it's their distribution. Same with any exchange or Binance, Coinbase. Like, so that's what Turtle's trying to build, and that's like what our focus is on. It's not really on the tech at all. It's just about like trust and building a deeper network and building out distribution to as many front ends as possible, because with that will in turn bring in better deal flow, because if you're a new protocol, you're going to want to work with Turtle to get the liquidity in the door.
What are some of those front ends, for example?
Yeah. So we just went live with the Earn SDK, which is like this. You can think of it as like we're trying to do like a Stripe type product for developers, where you've got, call it, three options. There's like a no code widget option where we just host a page for you where you can direct your user base to come and deposit and we can track that the deposit came through your widget and not other widgets, and that enables like a rev share on any revenue we earn off of deals. So like you guys can have your own like no code widget, right, that you direct your user base to. You don't necessarily need a front end that you host, and then any deposits that come through that we can track to you guys and reward you guys specifically for that. But there's also other tooling if you want to list deal flow inside of your existing front end. Say you're like a wallet or an exchange or just like a CoinGecko or something, where you have a lot of users that are viewing your site, but you may not have a way to monetize them. And so through like our SDK tooling, you can kind of import this widget into your front end repos and then display the deal flow. And then again, we know any deposits that come through that widget gets tracked to you, and then we can do like a full rev share. So we've got this whole like B2B website that most people have never seen, but that's been like our core focus for the last, call it 3-4 months.
Interesting. That's smart. Really scaling the efforts. Going back a little bit to those network effects, right? And the larger liquidity pool you're building over time, larger and larger. Do you think it will get to a point where basically any meaningful protocol will go through Turtle to bootstrap their liquidity at some point? And an additional question there is, does that introduce new risks, like some systemic risk where you become like such a vital component of the whole structure of the market that it starts introducing risks of its own?
Yeah, I mean, we're non-custodial, so that's nice in that like we don't actually, like, we can work with programs without ever touching any of the user funds. Like users can go and deposit in the Euler, and like we've got there's no additional risk that our users are taking for that deal, for example. So I think it scales nice in that sense, but of course there's always risks with like front end hacks or something. Like somebody is able to like list fake deal flow and get deposits into like some scam vault or something. Like obviously we don't want that to happen. So there's all sorts of like off-chain IT infra that we have in place to try to prevent that. But yeah, there's always risks in DeFi. There's risks from like a technical side. There's market risks. There's price risks, of course, with the incentives you're earning. And I think the more we can lay that out for users and explain it better, the we can actually be like helpful in avoiding that kind of stuff. So I think we do a way better job at describing risk on the website. So we're on one side we're working with Consensus and Creed DAO now to show risk assessments for all the protocols we work with. I think we've just done Euler so far, but we have a bunch in the queue. And so the goal with that is obviously everyone we work with is audited and we KYC them on the back end, but we also, it's important to think about like what does their off-chain setup look like in terms of key management and who has access to different things like the GitHub repos and all this. There's like a whole lot of stuff on the IT side that matters because a lot of times nowadays, like the auditing's gotten really good. I mean, especially with an EVM and Solidity, and it's fairly rare to see like a massive hack. But when stuff does happen, it's usually like a private key is compromised or something off chain, and then like the contract gets upgraded and everybody gets rocked. And it's like, yeah, you can have as many audits in the world, but like if your security off chain is bad, you can still have issues. So we're working with Creed to kind of build that part of the business out more. That's part of the diligence we're doing. And I think we can do a better job too of laying out like market and price risks associated with some of the opportunities too. Because if you're LPing, obviously there's like IL risk that you may or may not need to think about depending on the pools you're in. And if you're lending, you need to think about collateral and borrower risks and like, are you lending long? What's the duration? All sorts of things in finance, right? That like it's tricky out there. So I think, yeah, big part of Turtle is just kind of laying that out for people so that they're at least aware and they can learn a little bit about what they're deploying into before they do it. And hopefully, and I could see someday us almost having like a yield curve too, where we can if we can rank protocols based on risk, and like have like x axis is risk, y axis is yield, like you should see a uniform yield curve, right? Where like lower risk protocols are having to pay less in incentives versus like a higher risk newer protocol maybe needs to have higher yield, and you could pretty quickly see um, based on the yield and like risk assessment score, like where if somebody's an outlier and you're not getting compensated for the risk you're taking.
Absolutely. I saw Mariano nodding his head as well. So yeah, Mariano, feel free to jump in. But I know that um, from your roadmap, you guys specifically mentioned security and social reporting as being on the roadmap, right? Security and social reporting, built-in security and social attributes displayed via the Turtle UI, providing LPs with a stronger sense of their risk and opportunity. So yeah, that basically touched on like everything you just said. Basically touched on that, right? So you got, and it to me it also goes back to what I call sort of like socializing the due diligence, like doing the due diligence on behalf of like the users that if they're smaller players are simply not able to wing that level of shit.
Mm, yeah, 100%. Yeah, it's there's definitely like power in like collective bargaining and stuff, right? It's like as we grow and scale, it'll be easier to like scale out these processes too. And then we can get like scoring systems down. Some will be objective metrics like on chain, some will be subjective metrics that are more like we assess this team at some point in time and they're good. So just getting as much information in LP's hands as possible, I think is the goal. Um, yeah, no, another thing we're looking at too is on the social score side. You can imagine, like right now, a lot of teams spend marketing budget on Twitter or X. You know, like people going out and like tweeting about your protocol, right? And there's not always, I think, especially going back to the AI stuff, like there's not always a return on that investment, right? Like now people can spin up a bunch of AI bots. They can just put out this AI slop on Twitter. It's not necessarily driving in liquidity or protocol, but they're earning money because they can just spin up 50 bots and like game some leaderboard and move up the ranks and get paid out of your marketing budget, which I don't think is helpful for anybody. Like the protocol doesn't just want people just like plugging stuff into chat GPT and like spitting out as many tweets as possible to move up this leaderboard so they can earn more marketing spend. So we're looking at like a way of driving that through liquidity. So you can tie like how much somebody is tweeting about your protocol with how much liquidity they're actually bringing in the door. So it's kind of like closing the loop on that. And you can do that again through like the tooling that I mentioned, where you guys can have your like no code widget, and we can use like referral programs and stuff to say like this guy not only tweeted a lot about your protocol, but he actually like brought in a mil liquidity or something, right? And then that marketing spend was actually driving some ROI to your protocol versus just like going out into the abyss and getting a bunch of AI slop back. So that's like another thing we got cooking.
You touch on something that we talk about a lot internally. I think it's people, marketeers, but people at teams in general. We like certainty, and like metrics and KPIs afford a sense of knowing what's going on and a sense of traction and progress. But ironically, like what we found as well is that, if it's sort of like a made up metric or comes out of black box, it can sort of hijack this part of the human brain that wants to see KPIs and progression, even if it doesn't amount to anything. Like even if it's not proven that it leads to anything, and then you get like these weird, yeah, like twisted outcomes, like you said, like AI agents running amok, and like all the AI slop going crazy
Yeah.
on crypto Twitter. It's unfortunate, but it's probably partly because there's no real alternative yet out there. And I think it would be fascinating if you can indeed like tie these metrics together you can look at more fundamental um, metrics that move the needle on these factors that at the end of the day are what we care about, right? Volume, transactions, value, all these things. That's what moves the needle. And it would certainly be very, very interesting to see what you guys cook up on that front.
Yeah, I mean, you look at like other market equivalents, like influencers, they don't get paid necessarily to just post a story about something. Like they always have like a referral link or something, and then they get paid through how much volume they actually drive, right? And it's like
Yeah.
maybe they get some component for posting, but it's not. It's certainly not like the majority of the revenue you earn. It's mostly like closing the loop on that. It's like, yes, I posted and my audience listens to what I say and they actually drove volume to this product, right? And then you get paid. But by just like posting stuff, it doesn't like necessarily mean there's money coming in the door. And so, especially with AI, it's like because now like the value of like any given post is like gone down. So I definitely think there's a way to close that loop. I think within crypto, it's kind of missing right now. So yeah, it's a scenario we're exploring.
Cool, man. Looking at a
Yeah.
other very, very prominent development in the market. You know, we got AI and everything going on with mind sharing, KPIs, and things like that. On the other side, we have progression on the regulatory front. The Genius Act getting passed, the SEC basically doing a 180. We see ETF flows are totally going crazy. DATs as well. Um, yeah, it seems like there's a lot of acceleration in the market going on, especially from the institutional side. How is Turtle sort of positioning to capitalize on these flows that are to come?
Yeah, it's been interesting. Like TradFi, it's like the meme coin market kind of dried up in March there, and then it's come back now in the form of these stats and stuff on TradFi. So yeah, I don't know. I mean, they've got a lot of big pools of assets now. I mean, the Bitcoin ones, like I don't think we're gonna see Michael Saylor deploying their Bitcoin into DeFi protocols, but I think on the longer tail stuff, there's definitely going to need to be some differentiation on the yield side to have your product stand out versus the other DATs out there. And I think you'll start to see them go out further and further on the risk curve. And I'm sure some of them will blow up, but hopefully some of them come to Turtle and and use our yield opportunities. I think that's like a big untapped liquidity market for us. And so we've definitely been talking with like a few of the bigger ones on the east side because I think they're a lot more open to it than some of the Bitcoin ones. But yeah, it's exciting. I mean, I personally like the DAT stuff. I don't know how long it's gonna last. Like we're seeing the MNAVs come down quite a bit, especially in the last like week on some of the longer tail ones. Like some are even going negative, and it really depends on like the structure on a lot of these because if the tokens are locked, then ultimately like it will trade at a discount, and they're not going to be able to sell those tokens to cover the discount. So just like in general, people should be very careful out there because it like the transparency. It's been eye opening because I don't know if you guys remember like there's that was it like Liquor House or something where Leshner was trying to buy it out and he couldn't figure out the share count like of the shares outstanding. And it's like the transparency on tokens now is like better than TradFi because I was doing the same thing. I was like looking through these S1 docs trying to figure out what's the shares of this this thing, and it was totally wrong. Like everything was wrong. So I think we'll see yeah, a lot. I think we'll see a lot of these stats kind of blow up because there's just no transparency on what's the lockup on the pipe. When are people going to dump on you? Can they sell the tokens that they're holding, or are they locked with the foundation? Because if they can't, it's back to like the old GBTC trade where yeah, it's at a huge premium when markets are hot, but as soon as the market goes south, now you can trade at a discount. You can't get out of it because they can't sell the underlying. So yeah, I kind of went on a rant like about the DATs, but yeah, I still think there's like opportunity for Turtle there with the ones that do survive and like have a big pool of assets that they want to deploy and earn a yield on in a risk limited risk fashion.
it's exciting that you're already seeing some talks happening under the surface. You're in the trenches, you're in the under the weeds, in talking directly to these big players and institutions. And since they're already, trying to get a foothold and understanding the risks, what would it be like in the future where they compete for yield? Would you think they'll go and they'll even loop STE? They'll go far that way, or they just do the native, the very, let's say, vanilla types of yields in DeFi?
Yeah, I'd expect there to be like a curve. Like this, the larger it is, the less risk they're taking. The smaller it is, the more risk they're taking because they need to differentiate and try to grow AUM. So my expectation would be like if on one end of the spectrum you've got Michael Saylor and his Bitcoin, they're probably not doing anything with it. Like maybe some like lending, a little bit of it maybe, but not any like DeFi stuff, right? And then maybe somewhere in the middle you've got LPing on stable pairs or lending into Aave and like just real basic DeFi stuff, not taking any leverage or anything. And earning a reasonable yield there. And then the far end, you've maybe got these guys that are doing like leverage looping and really early stage stuff. And that's yeah, I think that makes sense, right? Because like the guys at the far end, they want to grow AUM, they want to differentiate, and like part of that is saying like I have a higher yield than everybody else in the market. I may not have the highest AUM, but I can earn you more, SOL per share or whatever their metrics are.
Yeah, ETH per share, BTC per share. Everyone's playing a similar game with different structures, as you mentioned, with locked or unlocked or different types of raises. But one of the curious things that I see from asset managers, which you're familiar with, your ex Verify Capital, right? There's this survey that goes around every month from Crypto Insights Group, CIG, that surveys 50 plus asset managers collectively, $3 billion in the crypto space. And they've been kind of in consensus for the past 12 months on the biggest risk for crypto so far, which is US regulation. And that's been falling significantly since Trump's got elected, basically turned into geopolitics and tariffs now, which has been declining as well from the consensus. And one of them is DATs, exploding. One of them is DeFi's and so big, hack. But that's still geopolitics is still the largest risk that asset managers in crypto believe is and a lower consensus on that just make make sure that and I think more and more we're going to see diversification of risk, which is essentially what the survey is doing. Do you see similar things in DeFi? Like there's these big blue chip DeFi protocols where they've basically cemented their position as safe and uh, trustless, not trustworthy. That's the word for crypto, right? And there's these longer tail new DeFi protocols which can also tap into these bigger ones. They're larger pools and strategies maybe fork and do similar logistics, not too crazy stuff that that is gonna basically new math that's unheard of, like Luna. That's not on the table here. Would you
Yeah.
say that's the way we're going? There's more diversification, and both LPs and protocols should look that way as a positive for the crypto industry.
Yeah, I think like the regulatory environment improving is definitely a positive for new exploration within DeFi. Again, I think like a lot of that kind of dried up in 22 and 23 because people, especially US based people, didn't feel like comfortable building and experimenting in new DeFi primitives because Gary's going to come knocking on your door and put you in jail. But yeah, hopefully like we have some sensible, reasonable regulation now. That's what people have been asking for years. And I think by enabling that, you're going to see way more experimentation and hopefully safer experimentation as a result on chain. But that's depends what the regulation is. If it's like real sandbox where it's like yes, you can do anything below a certain size, I think that kind of makes sense. And then as long as investors sign, I think like the way to do it is like have people sign some document that just says like, hey, I understand I'm taking like extreme risks here, and like if I lose my money, I'm not going to come and complain to you guys. Like I know what I'm doing, and like I don't want your protections. And like if you sign that off, then like you're free to participate in these like longer tail DeFi protocols. And if you get blown up, it's your fault, right? It's not like you can go like complain to a regulator that they didn't regulate Luna. You signed the document. So I think like I want to see more exploration. I think there's been like a lot of consolidation among like Aave, Pendle, Morpho, Euler has really made a big comeback too, which has been cool. But yeah, there's beyond that, like we'll see what happens, I guess.
Yeah, we
Nice.
recently
Yeah.
put out a thesis
Solar
on
waiver.
EULA, which had like I think over 11 smart contract audits, right, for before release. That's a strong comeback story. But what I wanted to mention is what is for me as an asset manager as well. I'm also running a small little fund with friends and family. I already have the courtesy of going on chain and DeFi. Not degenerate style, but I do. Uh, what do you see it, for example, as of right now, the pool of capital of liquid funds should be around 10 to 20 billion in crypto, which is really small, way smaller than 1% of the total market cap in crypto. What would you say the largest total addressable market unlock is from this deregulation in the US? Would it be from liquid funds themselves, which do have a lot of capital in the US already, or would it be from another capital base?
Yeah, I would say like the deregulation is going to be like mostly advantageous to like moving TradFi on chain. I think I saw like Leshner put out like some video the other day with I forget what podcast, but it's like 800 trillion. It's like the TAM of like TradFi basically. And so like I think it's not going to happen overnight, of course. Like we've seen from like stable coins to tokenized treasuries to tokenized private credit. They're kind of like slowly moving down the risk curve of TradFi assets, and I'm sure we'll have tokenized stocks. Uh, Though I know we have tokenized stocks already, but like some of the structures behind them are pretty crazy. So like there's going to be like I'm sure some like rug pulls along the way where it's like some sketchy company that's trying to manage it. But yeah, I think like over time we'll just continue to see more and more TradFi instruments moved on chain. And that will, but yeah, so I think your like upper bound is basically like the TradFi market. And
Yeah,
yeah, it's exciting.
they won't need to do like turnarounds, like going around the corner to reach these products as they have in the past, right? In the past, you had to basically like create an offshore entity, build all these kind of hoops and whatnot to not have U.S. investors. So now if that is unlocked, if that's the hope, that's SEC Project Crypto, and all these new developments coming to the markets, that's one of the major unlocks as well, right? They won't have to cut corners. They can go directly on chain via Coinbase and withdraw from Coinbase to DeFi, and from there
Yeah.
you go, right?
Yeah, I'm excited for that world because I like tried like in the last month I moved a lot of stuff from Robinhood and IBKR to on chain, and it's just
Nice.
like it's like a week plus to get through everything. You gotta go brokerage to bank account, and then the bank calls you like 10 times, like, are you sure you want to send it to Coinbase? Like, yeah, I'm sure. And they're like, it's pretty crazy. So yeah, the day where I can just like move money in, an hour around from stocks to crypto or whatever, I think is gonna be it'll feel like we've finally made it a little bit
Yeah,
better than it currently is.
for sure. Looking forward to that day.
Yeah.
Nick, zooming in a little bit back on Turtle, just to wrap it up. Um, we covered a lot of ground, and certainly on some things that are next for you guys. But what are maybe some things you still want to share on that's on the horizon for Turtle before we wrap it up? And where can people ideally go to find more information? Where do you want them to go? Where should they go?
Yeah. As far as what's on the horizon, we've got a bunch of new deals coming in. like campaigns specifically with a mix of chains that are gonna pre-launch and chains that are already launched and they have like liquid tokens already. So I think those will be super attractive yields for folks, especially now that like we'll see if we go into a bear market. But if you're holding stables, like I personally like deploy most of my stables through Turtle. And so I think there's a lot of good deal flow coming soon. And then, like I mentioned earlier, we've got some cool products on like the liquidity leaderboard side, and more targeted deal flow that I think will be interesting for people. But yeah, you can find us at turtle.xyz. We recently rebranded from turtle.club to turtle.xyz, so you'll find everything there. And yeah, I'm excited. There's a lot of stuff in the pipeline from the UI side that I think people will like, and the product's just going to continue getting better over the next 6 to 12 months, and hopefully people like it. So,
Amazing, man. We're here to see it. Thanks, Nick.
yes.
It was an interesting conversation. A lot of unique insights. So thanks for joining us, man.
Yeah, thanks guys. It's great talking today. I appreciate having me on.
Absolutely. All right. Also, thanks to everyone tuning in. Always a pleasure. If you enjoyed this, you can access more insights in the following ways. For in depth reports, many of them publicly accessible, you can join our research platform. For protocol and market summaries and highlights, you can subscribe to our newsletter. And for daily news updates, you can join our Telegram channel, all in the link in the bio. And of course, tune in next time. We're live every Thursday, 10 a.m. Eastern Time on X and YouTube. This was Market Cap, where funds and firms provide their insight on their activities, sector, and markets at large to you, our audience of institutional investors and traders, as well as industry professionals. See you on the next Market Cap.
See you guys.